So I hear a lot of wrong information when it comes to residency and tax residency. And it is super important that you understand the difference between both and that you know for sure where your tax residency is. Now, if you fail to do so, your residency that you got from your company setup or your investment will only get you more in trouble than it will benefit you. And in this video, I will explain the difference between these two things and how you can get it and why it is so crucial for you. Hi, my name is and I'm the owner of Emifast, and we help entrepreneurs from all over the world with lowering their tax burden, opening bank accounts abroad, obtaining residencies and/or citizenships, and helping them with their global investments. Now let's get started with the basics of these two words, because there is a huge difference between a residency and a tax residency. And I would almost say that it is a matter of life and death. Like seriously, you make a mistake here and you will pay the bill. And I aim to simplify the explanation, because creating a video that explains every unique country and situation is almost impossible. So if you want to know something very specific, please reach out to us and the link is in the description. So what is a residency permit? A residency permit is nothing more than being a resident of a certain country. It allows you to stay in the country, and sometimes you can get certain rights in that particular country. You can open bank accounts, buy real estate, and so on. You can get it in many different ways and for many different reasons. And no, a visa is of course not a residency permit. So we have clients who apply for a residency permit to eventually become naturalized and become a citizen. So you name it. There's also a huge difference between a permanent and a temporary residency. I mean, the word is saying itself. The temporary one is temporary, so you need to renew it every time it expires, and depending on the country and the type of visa, you need to spend a couple of days in the country. A residency permit will in most cases do nothing to your tax position, so you only have the ability to live somewhere else with or without certain rights. For example, we had a European client who had a residency permit from the UAE because he had bought property here, and he thought that if he will visit Dubai once a year that he will be taxed here. Now that is of course completely wrong. And same for our non-European clients, because they look sometimes very surprised when we give them an option to apply for a residency permit in Brazil, for example, because often they assume that they will be taxable in Brazil, but that is of course not the truth. So having a residency permit does not always mean that you will be qualified as a tax resident, and that can be good or bad, like you see in the example that I just made. Now let's talk about what can make you a tax resident, and don't take this so black and white. So a lot of Western countries are very strict about this, and a lot of will come right now with, yes, but I live 180 days in my home country and all the rest I'm traveling, so I'm not tax liable. Now, that is also completely wrong. It still means that your central flight or the country you have the most connection with is in your home country. So it is important to cut as many ties, preferably even all ties with your home country. And I'm talking about your bank account, your home, your insurance, where does your family live, and so on. And of course, every case is different, and again, so don't copy paste what I'm saying here. And what I want you to say is to let an expert look into this. So not somebody who's selling you a company set up in Delaware, for example, because they don't know. Another thing is that a lot of European countries do not recognize digital nomads. So let's even say that you spend only 3 months in your home country, and for the rest you are jumping around from one country to one country without a tax residency somewhere. You can really get in trouble and still be tax liable in your home country. Because remember, your high tax country has all the interest to tax you. That is their business model, that's the way how they make money, so watch out. And of course, we also have other countries in Southeast Asia, South America, and Eastern Europe that only use the day test. So if you're less than 183 days in their country, they will not tax you. The day test is just straightforward and simple. So before you even think of, hey, how can I get my tax residence in a country? I would start with, how can I exit my country? How can I change my tax residency? There are 101 companies that will sell you a residency permit and tell you how you can be a tax resident in the country that they are selling. But they have no idea what they do in your home country. They don't care actually neither, because they have the goal to sell you a setup, a residency, a bank card, whatsoever. So how you need to exit your country is really, they really don't care. We can look at the whole process for you. There are just a lot of things that should be arranged in the country you live in right now and where you want to move to. You want to be sure that in 3 years from now, you don't receive a letter from your home country telling you that you're tax liable and that you didn't declare any income for the past 3 years. And understand well that of course there are exceptions to this. And as I've said several times, every situation is slightly different anyway. Now, if you find this video helpful, give us a thumbs up, share it with your network, and don't forget to subscribe for more insightful content. Thank you for watching, and I will see you in the next video.